Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 20th of October 2023. First chart is the US Dollar Index Futures as usual. And you can see this week the chart has a narrow spread down bar. Now, the market's effectively tested for supply all week, which is a little unusual, but not unheard of. And price has traded below the previous bar's close almost all week on average volume. So this was a test for supply, but it wasn't perhaps a textbook perfect test for supply. Volume was a little higher than might be considered ideal, but the narrow spread suggests that the market has comfortably absorbed any selling pressure that has emerged. If selling pressure was really strong and overwhelming, you would have expected this spread to be a little wider. So a narrow spread on average volume is showing you that the market has comfortably absorbed the supply being drawn out this week. Now you've got the lows of the range coming through here, and it's an important range. So you would expect the market to spend a little bit of time, as it has done so a month now, trading at this level. And it does appear that the market has absorbed any supply that's been drawn out here, and the bias remains to the upside in this market, with the market appearing to comfortably absorb any selling pressure that was drawn out and the spread being narrow in response. So this market remains relatively strong, even if it might appear over the last month that price has stalled out a little bit and is moving sideways. This is the market going through an important process, and it appears that the buyers remain in charge. They hold the upper hand. Next chart is the E-mini S&P. We've got a important resistance zone above. That's this zone that's marked up here, which the market tested through here, and it failed, tried to recover back here, and wasn't able to recover, and price pushed lower again. There's the lows of the important range there. You can see price has dropped below it. It's attempted to hold on, and this week price has really dropped out the bottom, and it's closed below the lows of this bar. So I think you're pretty much almost certain the price is coming back to this level. Now in here was a extended period of absorption, and that's probably where price is going to go. You've got the range in here, so I would be looking for price to come back into this sort of level, into here, and attempt to find some support there. US Treasury 10-year note futures continue to break down. We saw last week a little bit of a relief valve that the market attempted to push higher. The close was well off the bar's high, so supply was being drawn out. You can see that here. And where it happened in the past, here. In the past, there was only a narrow spread down bar in response where the market attempted to hold on. This week, price continued to accelerate lower, as it has done so for the previous 4 weeks prior to that, where you can see on the volumes, the market was really accelerating lower. When it attempted to move higher, the volume reduced considerably, almost to below average, because the demand wasn't there. It was just a little relief valve, and the market has pushed lower again in response and is threatening to close below the previous bar's low, which really is a sign of weakness. So this market still isn't showing any great signs of strength. There was no intent being shown in last week's up bar. If anything, it was just a weak attempt to move higher that was easily overcome by selling pressure. Copper price futures. Copper price futures continue to attempt to hold on. They're resisting moving lower. This is the lows of the range. You can see the market isn't really breaking down. There's no serious breakdown bar. If you go back over here, here is an obvious breakdown bar. It's bar with a wider spread. It closes clearly below the previous lows here, and this is a breakdown. Market's moved sideways since, but we haven't really had a breakdown bar. In fact, the last 2 weeks have traded inside the range of this bar in here. This is a market trying to hold on. It's reluctant to move lower. Volume was increased this week, but spread actually narrowed. Price remained inside the range of this bar. The market is attempting to hold on. It's the best way to put it. It may not be successful. Price may continue to grind lower, but it's not going lower with intent. It's struggling to move lower. You've got over here a period of accumulation, and I imagine that that's offering some support in the background now. The market's sitting on top of that. This is where the market accumulated previously before pushing higher. And that's going to offer some support in the background, which I expect it is doing. But this market, while it is moving lower, is reluctant to move lower. Gold price futures, lows of the range come through here. Now, actually, interestingly, you should look at, if you're analysing these charts, these 3 bars here. Now, for me, this is a 3-bar shakeout. If they were all put together into one bar, it would give you a bar that looked like this, and it would be a shakeout of the market. You effectively had a thrust lower, a bar with a very narrow spread in comparison, but still on above average and quite high volume. This was buying support coming in here, and this may have been an engineered down bar. We don't know, but this bar, the narrow spread, the above average volume, and the subsequent up bar shows this was strong buying here. And then in response, you had to buy the offer bar on still above average volume. So let's just tidy that up. There's no doubt this was buying support, and then after the market had thrust lower, you've got the offer sitting here above, and in 1 week, the whole lot was scooped up. Boom, the market just bought a lot. And in response, this week, test for supply here, most likely early in the week, and then further buying support as the market just pushes higher. This is good, strong buying, and it should be noted. Loads of the range come through there, and the range above that goes through here. You can see that the market was unable to recover this breakdown here previously, but now the market has thrust itself up. It's closed above it. It's probably not clearly above it at the moment, so you might find there's an early test next week. But if that test finds volume is low or selling pressure is low, this market will push higher again in response. So that's what I'd be expecting, an early test for supply, just a slight loss of ground, but not much. It'll look something like this. That might be in the first day or so next week. And if volume's found to be low, I would expect the market to make a serious attempt to push higher in response. Silver price futures. Silver price futures haven't been trading as strong as gold recently, and the push lower doesn't look anything like that 3-bar shakeout. This bar on the gold chart was much narrower. This bar was much higher, moved right up here. Gold is trading sort of at that level at the moment. So this market is following gold and chasing it. And it's really only responding in this fashion because gold is. It's responding to gold. It's not necessarily leading the markets. Now, if I put in the lows of the range here, the highs of the range really come through here. This was a bit of over-enthusiasm, but the market is in here pushing up. It needs to get above that level initially, and if it does so successfully, it probably will have the strength to push up to this highs of the range and gold may drag it up there anyway. So it's worth watching, but gold is definitely the leader at the moment. Light crude price futures pushed to the lows of the range 3 weeks ago. You've got here is where price broke down. This was support previously, and here was your breakdown bar here, which pushed down to the lows of this range here. And now prices move back up. It's finding a bit of supply being drawn out. As you can see, there was a test for supply early this week here, below the previous close, and then an attempt to push higher, but some supply has been drawn out above this line, and that's caused price to close just off the highs. You can see volume was below average this week, so there was more intent in the testing for supply and less intent in pushing higher this week. So I would suggest that was a test with a bit of over-enthusiasm in the top, and you might find that there is actually some more intent in the market than it appears, and with some more intent and a bit more oomph, a bit more volume, that any supply that's being drawn out from the left here will easily be overcome and price will push higher in response. So consider that more a test with a bit of over-enthusiasm in the top, with no real intent being shown to push higher, and that's why the market closed off its highs this week. There was no real intent to push higher. So a small amount of supply from the left easily pushed price down, rather than price being overwhelmed. If volume was high this week, then you would say that the market was overwhelmed by supply from the left, but it wasn't. Volume was well below average and probably one of the lower volumes for a few weeks. So this was a test for supply, a little bit of over-enthusiasm in the top, and that allowed the market to push price down to close just below these lows of the range here. This is Euro US dollar currency futures, and you can see the market has been making an attempt to consolidate here. This week's bar isn't particularly strong. It's an up bar, but it's the narrowest of the 3 bars. So when the market was attempting to push higher, remembering that the US dollar tested for supply all week, so it traded within the range of the previous bar, but as a down bar last week. So that's allowed this market to trade as an up bar this week, and it did so within the range of the previous bar, the exact inverse of the US dollar. This wasn't a strong bar. This was a weak up bar. Volume remained a touch below average, and if this was really strong bar, it would have been a bar that sat tall and proud like this. But it was a narrow spread up bar, and it just shows the weakness in the market. The opportunity was presented for price to push higher when the US dollar was testing for supply, and the opportunity wasn't taken effectively. Now you've got the lows of the range, of the larger range, come through there. You can see the market is attempting to consolidate here. I'm not sure how successful it'll be. The next little level below comes through here. If this fails, and it probably will do so if the US dollar continues higher, that's where the market is probably heading in here. The British pound currency futures. This market is also attempting to consolidate just through here. You've got the lows of the range through here. So the market is sitting up on top of that, which is a little bit stronger. But this week's up bar is weaker than the euro. Volume was low like it was on the euro, but this market had the opportunity to move higher just like the euro did. At least it actually sat up. This is barely an up bar, closes in the middle, spread is very narrow. There's weakness in this market. It's attempting to hold on. It's weak. It's certainly not strong. Aussie dollar currency futures. Here's the lows of the recent range. You can see the lows were really penetrated last week. There was an attempt to recover this week. Price attempted to push higher, and It did trade above these lows, but it failed. It failed badly, and price has closed back closer to the lows than the high on below average volume. There's no oomph, there's no intent. The market is struggling to push higher. It's all full of weakness, and the larger range comes through here. So you can see where price is in relation to that. I expect the market will continue trading this sort of level in here. It may continue lower as the US dollar continues to strengthen. The bias in the US dollar is towards the upside, or at least it appears that it is. And if that's the case, that'll force this market to continue to grind lower. It may grind lower reluctantly, but it'll probably continue to grind lower. Last chart is Bitcoin futures. Bitcoin futures responded as we suggested last week. We've been saying for a while here that there's accumulation taking place throughout this level here. Last week, price dipped lower, and although it wasn't a textbook perfect test for supply, volume was found to be very low. When price pulled back, that suggested that the bias was towards the upside. The path of least resistance in the market was towards the upside. And that's exactly what became apparent this week. Price pushed higher, and there was intent being shown. The market traded with above average volume and a wider spread than has been seen for weeks and weeks. And it's pretty much come up to the highs of this bar, this down bar here. So that was a good response. You would probably expect to see a test for supply early next week. And if the supply is found to be low, it'll give the opportunity for price to continue higher. If some supply is drawn out, you may see price just trading sideways in a consolidation pattern for the rest of next week. Now, just to fill in some lines here so we can see where we are. I've said for weeks and weeks we've probably got an accumulation zone here in the background, and price popped out the top. Here's the highs of that range, and the market was unable to accelerate higher here. Tested for the strength of the breakout, a secondary attempt to break out, and then price has come back and continued a accumulation back here, and this has been the more successful one, and now price is attempting to push higher again. Now, it's going to take a little bit of effort to do so, and I would expect the likely outcome early next week is for a test for supply. That is a narrow spread down bar closing mid to high on reduced or low volume, and I would expect an attempt to test for supply next week. If supply is found to be drawn out, and it may do so after this week's gains, you may find the market just consolidate sideways in response. And if supply is found to be low, that is, selling pressure doesn't emerge as the market pulls back with a narrow spread, then the bias will remain to the upside, and you can expect the market to make an attempt to push higher. That's either an acceleration or a grind higher, one or the other. So that's looking fine. It's making sense. We identified the accumulation taking place through here. We saw the lack of selling pressure emerge here, and we've seen a positive response, just as you would expect this week, to that lack of selling pressure. So that's all good. Just back to the US dollar index futures just quickly. That should make more sense on this chart now. Price traded inside the range of the previous bar, effectively testing the market for supply all week last week. Volume wasn't low, it was about average. So the spread not being wide suggests that volatility wasn't high, and what supply was being drawn out was being comfortably absorbed by the market. And that suggests, if successful, the market will attempt at least to push higher in response. It's an important range. It comes through like that. This is like a zone of resistance, and it's sort of, it probably isn't, but it is sort of like this is a big accumulation zone here, and this is the attempt to break out. And you can treat it something like that. Now above, you've got The next zone above, if there's a successful breakout, is here and above that, because it appears that there's a bias towards the upside, is through here. So I would expect the market to make an attempt to push higher next week. And if successful, it may just grind higher. I don't expect it to accelerate higher. It's possible, but more likely it'll grind higher and take a little bit of time to push its way up. But I'm expecting the market to push up towards 110, and that's going to offer headwinds to many of the other associated markets. That'll make it more difficult for all of these markets, the E-mini, the 10-year note futures, copper, gold, silver, crude, all of the currencies. It's going to make it more difficult for them if this market continues to move higher. What you will be able to see, though, is those markets who buck the trend and absorb the strength in the US dollar and continue higher, albeit with narrower spreads than you might expect otherwise. That is, in fact, a real show of strength. When the US dollar is moving higher, and some of these markets, and I'm thinking of gold in particular, if that can continue higher, and even if the gold price doesn't move up with real intent, it just grinds higher, it's effectively absorbing the strength in the US dollar, and that's a serious show of strength if it happens. So keep your eyes on these associated markets and try to identify the ones which are absorbing the strength in the US dollar and are able to continue moving higher, at least to some degree, at the same time. Okay, that's my lot. Thanks for your time. See you next week. See ya.